All right, y'all. So welcome to another money mantra training. Today we're going to be talking more about candlesticks. And we're going to be talking about market structure, which is something that's important. And we're also going to be talking about trading tactics. What I really want to focus on today is one particular candle, which is called the Pinbar Candle. You've probably seen this candle a lot of times, and you may be one of those people who actually know how to look at the market, but when it comes to explaining it to somebody else, you just get a little confused, or you may see something and be like, oh, I'm going to get in for this trade now and not fully understand like why you are clearing or why your trade is able to go a certain amount of pips in the market and you're able to hit TP. So just a little color coded guide if you like your notes color coded, or if you just listen to what I'm saying. Everything that I've highlighted in red is just something that is just like a fact. It's very important. It's something that you should remember. And the things as I scroll through my notes that are highlighted in yellow, you'll see is just pretty much something that you always want to keep at the back of your mind. So essentially all this information is important, but the red stuff is really important. It's just like if you know this thing, you cannot fail. And the yellow was the main takeaway that I got from that thing. So first we're gonna just be reviewing market structure. So if you want to write it down or just be mindful that market structure when trading is one of the most important skills that you need as a trader. Is literally the ability to read the market. What are you looking at? Where are the highs? Where are the lows? And it will help you use the right price action strategies in the right market conditions. Now, there are a few different types of markets and how they can move, and you will be able to spot this with your naked eye. Now, this information may be repetitive to some people, but hopefully hearing it in the technical terms and getting a little bit more visual will help you really, really, really understand. And I hope it clicks for somebody today. So anytime something makes sense for y'all or you learn something new, just drop a MS or makes sense in the chat just so I can know that it's clicking or I'm like explaining this the right way. So trending markets are categorized by a repeating pattern of higher highs and higher lows in the uptrending market and lower highs and lower lows in the downtrending market. Now that might sound a little crazy, but it's really not. We can typically look at a market right away to tell if it's trending up or down just based on the shape of the market. So for example, the Candlestick Bible says here, right, that when the market is on an uptrend, is literally creating higher highs and lower lows, right? And that this is all that this means, right? And now I'm going to show you the example of what the Candlestick Bible shows us, and then I'm going to go back and show you an example on a live chart and scanner so you can recognize it. Now, here we go. What we see here is, let me delete this line, I'll draw it again. What we see here is the market, right? And we can see that it's going up. Now, for people who are new or you may not know what's going on, if you see these white candles in these examples, that means that the market is buying. It's consistently going up. Price is going higher and higher and higher. If you see these black candles, they represent red candles or sell candles, and it's just telling you that the market is actually going down. So you'll notice an uptrend when there's a high, right? Let me get my pencil. Right, you'll notice an uptrend when there's a high, right? So the market will start at a low place like this. As we can see, it was selling, right? It was selling, and then it decided to go up. We can see that. So now a higher high has been created. Now we see the market was capped. We don't see any candle activity, right, above where the market was buying, and then it decided to go back down. So it created a higher low. Now this is only a higher low because it's still low. Obviously, this is high and this is low, but it's higher than the previous low of where this trend actually started, right? So then the market makes another move, right? It continues to buy. We see all these white candles, but they will be blue in your market. It's going up until it hits another resistance, which is a higher high, right? And this is only a higher high because it's higher than the previous high that we can visually see in the market. So then, of course, the market does this little move, right? Comes down and it's a higher low. Why? Because it's not high anymore. Price has sold all the way back down to a certain point. Um, and now it's still higher than this low, but it's lower than this high. So if that makes sense, y'all, drop a MS in the chat, right? You'll be able to recognize an uptrending market, right, by a series of higher highs, right, and higher lows. It's consistently going up. Now the market can't go one way forever, or it will look like this, right? In order for the buyers and sellers, they're doing this dance. It has to go up. It has to go down. It has to go up. It has to go down. But you'll know what type of market it is based on what type of pattern is being created, right? Now, again, you'll see right here, it says you don't need you'll see right here, it says you don't need indicators to decide if it's bullish or bearish, just a visual observation. Now, a bullish market means that the market is going up, right? It just means that it's an uptrending market, right? And if you want to remember, bulls attack with their horns, they go up, right? That's why it's called a bullish market. Then you also have a bearish market, because bears attack with their claws, right? They go down. So bearish means that the market is actually going to be selling. Now, this is an example of what a downtrend will look like. Of course, it's very similar to an uptrend, except we're going the opposite way. So we have the market starts up here, right? A nice area of resistance. We don't see anything happening above here, right? We see that the sellers were able to push the price down to a low, right? They pushed it down to a low price and then it came up and this was a lower high. Why? Because even though the market is consistently getting lower and lower and lower and lower, it still has to make the movements of the market is always going to be doing this pattern, right? And this is just a tip or a gem. Something that I used to do when I first started trading was that if you're looking at the market, just always think about the market in terms of M's or W's, right? If you're seeing M's, right, it just depends on how you're looking at it, but it's the same pattern. It could be an M or W. If you're looking at it in terms of M's, right, where you buy is always going to be at the bottom of the M, right? Where your M starts. So let's just say the market is doing this, right? And the market is doing this. You're not going to want to buy up here. That doesn't make any sense, right? You're going to buy once the market comes back down to finish the pattern that it's going to do, no matter which time frame that you're looking at, right? And of course, if you're looking, let me clear this off. And of course, if you're looking for buys, right, it'll be this pattern. It's the same pattern, WM, WM. But for the buys, you're going to pretty much, or for the sells, I'm sorry, you want to sell at the top. And for the buys, you want to buy at the bottom, no matter which way you're looking at it, right? Because if we know prices low down here, once it goes up here, it's going to be high, then it's going to be low, then it's going to be high, right? If that makes sense, y'all, drop a MS in the chat. And I'm actually going to pull up the Liberty scanner, which is depending on which package you have, that will determine which scanner you use. But since we're not focusing on strategy too much today, we're just looking at the naked scanner. You can use essentially any scanner that you have access to, right? Now, I'm not doing any news check-in because, again, this is all just for visual purposes, right? So we're going to look at, I'm taking all of the indicators off the chart because we don't need them right now. And I'm just going to zoom out, right? I'm just going to zoom out a little bit, right? This is the hour time frame. And I want you guys to tell me what type of pattern that this market is in. Are we in an uptrend, right? Are we in a downtrend, right? Somebody let me know. What type of market is this? Anybody in the chat? Let me make sure I can see the chat. All right, it's down, right? We got 3 downs. Anybody else want to take a shot, take a stab, and say whether this market is trending up or trending down? Yep, it's trending down. Yep. So for anybody who said down, that is correct, right? And how do we know it's trending down, right? Is 2 ways, right? 2 visual ways with no indicators that we can see why this market is trending down. So somebody tell me. Anybody in the chat? Give me 1 or 2 reasons as to why we know this is a downtrend. It has higher lows and lower highs. Yes, lower lows. Yes, for the technical terms. I see a lot of red. Yes. That's the second way you can determine the trend of a market, right? Now you're collecting all this information and you're doing all of this just so that you can find your best entry point. So you need to know, is this market trending up? Is it trending down? Because if it's trending up, we know we're going to have a lot more buy opportunities, right? We're going to have a lot more buy opportunities because the market is consistently going up. So we know since it's going to be doing this little dance, do y'all also see the M and W pattern, right? Just drop which letter you see. It doesn't matter. Both answers are right. But if you see the M or W pattern happening in the market right now, just drop the letter that you see and let me know that we're on the same page, right? Now, I see an M leading into a W. Okay, that's hella valid, right? We got W's, we got M's, but the most important thing is that you recognize this pattern in the market. And let me tell you why, right? Let me tell you why. Because I'm gonna get my pencil and draw it out, but they have tools where you can draw this out. So we know this is a downtrending market, right? So the first way we know is because we do see those series of, let me just write it down right here. Well, I'm gonna try to write neat for y'all, but don't quote me, right? So we do have our, right? We have our lower high, right? We have our lower high, right? We have our lower high, right? We have our lower low. We We have our lower low. So anybody who said that the market is trending down, you guys are absolutely correct, because we can see that it's continuously finding these new high points and these new low points. Okay, cool. Now, the second way that you can recognize an uptrend or a downtrend is by the color that you see. So in the candlestick Bible, everything is black and white. But on our live charts, right, the red candles represent a selling market and the blue candles represent a buying market. So simply, even without any indicators yet, if you see more red, you know that the market is selling. If you see more blue, you know that the market is buying. And this can also help you with your entry points, because check this out. Now I'm going to draw my pencil. I'm going to use my favorite green, right? So remember that pattern that's in the market, right? We got the M or the W, right? Whichever one you're seeing. And how you form that pattern yourself is literally just connect. I promise y'all, it's this easy. Connect the highs and lows in the market. If you guys see what I'm doing, right? You see the green marker, you see me connect the highs and lows, and this is making sense, right? Drop a MS in the chat, right? Let me know this making sense, right? We just drawing out the pattern. I'm just simply following the candles. I'm connecting my highs and lows, right, to find my next entry point. Now, this is going to apply whether you're doing HFX or FRX, right? So we got our high, we got our low, we got our high, right? Now, since this is a selling market, we know that we need to find a new lower high, right? This is looking like this market is about to sell, because if this is a selling market and we need a new lower high, why would the market get past this point, right? Just drawing our pattern. So don't we think that if we put a line right here, let me just do it real quick, put a horizontal line just to visually show y'all what I'm trying to say. If we put a line right there, right, that's going to be our previous lower high. And then we could tell that a new lower high, like a new lower high is coming up, because we have to continue that pattern. And as soon as the market hits that point, it should do what? As soon as the market hits this point, y'all, what should it do? Based on our pattern. Let me know. Are you going for a buy or are you going for a sell? Just by looking at this, right? Margaret said she's going for a sell. Roy said he's going for a sell. Nisha said she's going for a sell. All right, exactly. We're going for a sell. Oh no, Benji, we're not going to be buying. We're definitely going for a sell, because remember, if the market has to continue this W or M pattern, it's going to have to sell in order to complete the pattern. Remember, we're at the top of the M right now, right? We're at the top of the M right now, right? At the beginning of the M or the top of the W. We know that the market is going to sell. In order to continue that pattern, it has to sell, right? And it has to actually go all the way down, right? It should actually sell all the way down, right? Just to continue that pattern. All right, yep, Benji, you got it. All right, awesome. So now we know how to spot an uptrend and the downtrend, right? If we good on that visually, right, we know we just found our entry point visually, right? Just drop a 7 in the chat, because that's so important to be able to recognize that simple thing, right? Now we're going to get even more jiggy, because right now we just talking about market structure. We didn't get into the actual candles, but you guys are going to love this, right? And again, this is just reiterating what I said. A bearish market means that there are a series of higher lows and lower lows, which indicate a downtrend. Now, whether you want to get technical or not, you should be able to visually see this, right? Now, this is important, and that's why I put it in yellow. According to statistics, right, trends are estimated to occur 30% of the time. Now, that's really, really good, because it means that we can kind of predict what's going to happen in the market. The market is always making the same move. And I'm going to highlight that to y'all as well. As we work through different time frames, we are going to be using bigger time frames just to show you, because the bigger the time frame, the bigger the trend, right? The more you can trust it and the more you can believe it. So let's just say if you only met somebody 1 or 2 times, right? 1 or 2 times, you don't know that person. You met them 1 to 5 times. Let's just say that, because if we're talking about minutes in the market, you don't really know somebody after 1 to 5 minutes. How you just going to jump in there and start doing whatever? That don't make any sense. But if you know somebody for, let's just say you was talking to them for an hour, right? You have a better idea of who that person is. You're talking to them for 4 hours. You're talking to that person for weeks, months. It's just like, wow, the more time you put in and you actually get to know something or someone, the better analysis you can have, right? And it's the same thing when you look at the market, right? Like a lot of us, when we do HFX, we want to do a 1 minute analysis, but you don't have to do a 1 minute analysis for a 1 minute trade, right? It's like saying, again, with the same analogy, if you're getting to know somebody, you can know somebody for a longer period of time and make a decision about them quicker than you can make a decision about somebody you just met. If that makes sense, y'all, drop a MS in the chat, because We need to really get into these higher time frames and understand how the bigger the pattern, the bigger the trend, right? And then you can always come back and look at the smaller time frames as well. So let me go back to my actual chart, and I'm gonna show you what I mean by this, right? So I'm gonna go back to the live market, but I do just want to give you guys some more vocabulary to let you know the things that the market is doing and how to actually spot when something like this is going to happen. So pretty much it's two types of moves. Do we have any notes up here? Nope. So it's actually two types of moves that a market can make, right? They're called impulsive moves and they're called retracement moves. Now I just drew it out for y'all, but just so you can have that term in your mind, you could be like, oh, the market is about to retrace, or oh, the market is about to make an impulsive move. You should be able to spot that again with your naked eye. Now, for the second part of the training, we're going to combine how looking at the candles in addition to the indicators will help you find better trade ideas. So let's look at this, right? Now, if the market is trending up, right, we can see that the market is trending up just simply based on the shape and based on the fact that we see more white. We see more white candles, right? I'm sorry, 1 second. Let me just draw this up. And the fact that we see more white candles, right? So the market is trending up. Now, when the market is trending up, you'll always see that it'll start at a low point. And what I really want you to recognize is the candles, right? This is the type of candle that we're really going to pay attention to, right? This type of candle. This type of candle typically has a long body, right? I mean, a long wick and a very small body, right? It'll look something like that. And I'm going to just circle a few more on my chart. So we got that one. We got this one. We got, do we have any sell ones? We got this one. All right, we got this one. I'm just circling all of them so y'all can really get a great idea of what's happening. So when we see candles that look like this, it can either look like this or it can look like this, right? These are the type of candles I want you to start to recognize. They're called pin bars. And it really doesn't matter if they're blue or red, but when you see those candles, you know that the market is about to switch directions. It's telling you that the current side, right, is running out of power and that the new side is about to take over. So let's look right here. So when the market is retracing, right, it's doing the opposite of what you need it to do, right? So we see that the market started here, it's sold down. We see our pin bar candle is created, right? It has a longer wick, right, and a smaller body, meaning that the sellers kept trying to push it down, but the buyers pushed it up. Hence why we have this impulsive move, right? The impulsive move happens when you see a candle like this forming at a resistance. Yeah, it's very similar. It's very similar, but the body will be super, super small, right? But it won't be invisible. Like it won't be invisible. It'll just be small. So it kind of looks like a hammer. All the candles look the same, but the most important thing is that you know that it has a smaller body and a longer wick. If it's a bullish pin bar, you'll see the long body at the bottom. This just means that the market is about to go for a buy. The buyers are pushing the market up with all this resistance, right? And the sellers are actually running out. And then you have the same thing. If it's going to be a sell, you'll see that the sellers are really, really, really trying to continue to push the market down. So you will always see if it's a buy, you will see the candle, the pin bar candle at the support, not the resistance, right? And if it's a sell, you'll see the pin bar candle at the resistance. It's just signaling you that this trend is about to start. So look here, we see one, right? It's an impulsive move. Market goes up. Now, of course, the market can't continue in one way forever. So once it reaches its resistance, right, it'll come back down and it'll retrace, right? So the retracement is when it's in its selling period. The impulsive is when it's in its buying period. Again, we have the retracement, market's coming down. We see our candle, right, which is our signal. Market is about to change. And then we have another impulsive move, right? Then we have a retracement, right? Then we have another impulsive move. And then even look at this candle right here, right? Look at this little candle right here. I'm gonna just circle it, right? Now, even though it wasn't a big retracement, we still see that the market, once we see that that candle happened, the market actually changed directions. If this is making sense, y'all, drop an MS in the chat, right? So just start to really look out for those type of candles when the market is making its impulsive or retracing moves, right? So if it's a buying market, you'll notice that the buying trend is happening. That's the impulsive move. When you see that a candle starts to form at the resistance, right? No matter what type of wick that it has, if it has a wick on it, you know that it's about to switch directions because it can no longer continue to go in that direction. So impulsive move, right? You'll notice it could be your doji, it could be your hammer, it could be your pinbar candle, right? But it'll always have a small body and it'll have a wick. That's your retracement, right? Now, even look at it in the buying phase. We have it selling, selling, selling. Candle starts to develop a wick, right? You see this body, candle starts to develop a wick. We know an impulsive move is coming. Impulsive, impulsive, impulsive. Retracement happens, right? As soon as you start to see the wick on the top candle. So that's for a buying market. Now for a selling market, of course, it'll be the same exact thing. Let me see. Here we go. Yep. So, all right. So in the selling market, you'll also notice those type of candles that are happening at certain points. And this is where the confluence comes in, when you combine your indicators with knowing how to recognize these candles. So here we go. I'm gonna draw a line, right? Resistance. We know it's resistance because price was buying and then it resisted going any higher. We don't see any candle activity above this point, right? So we got the impulsive move. We start to see those wicks, right? Then we have the impulsive move selling down. We start to see those wicks, right, guys? This is you're going to notice this a lot more now that it's in your conscious, right? You're going to notice those wicks. It could be 1, 2, or 3. I like to see at least 3 wicks touch a point of resistance. They don't have to be right next to each other, but I like to see 3 wicks touch my point of resistance to know that my impulsive move is about to happen, right? Then we got the impulsive move, right? Then we see the wick, right? Hit that level of resistance. Then we have the impulsive move. Then we have the retracement, right? Then we have the impulsive move. And then look, here's we can use, well, we see a little wick on this candle, right? We see a little wick. We learned about these candles this week as well. If you see candles that are literally the same thing, you also know what's about to happen. So retracement, impulsive move, retracement, impulsive move. So that's that with how to identify a trending market. And let me just pull up my scanner so we can actually look at some impulsive move and retracements and see what really happened here. Just start to look at those candles, right? I want us to really pay attention to these candles that are forming, right? And then when we throw the indicators on here, y'all gonna be like, what? This is crazy. So let me find a good one. Let me zoom out. Make this bigger. All right, I like this one for the sell. And I'm gonna look and see if I can find a buy in the same window. All right, but let's just start with this one right here. Let's start with this beautiful red candle right there. Let me just put a box around it so that we don't forget. These are the type of things I want y'all to start to look for right there, right? Ooh. All right, there we go. Right, y'all? I gotta zoom out so y'all can see the pattern. So if we were looking at this on an hour time frame, right, that means each of these candles are forming every hour, right? One candle is forming every hour. So if we look right here, right, we see this candle right here. This can be considered like a Pinbar candle because we had a strong momentum, right, on the buy. We actually, let me just draw it out for y'all for real, right? We see that the market actually started down here, right? It started down here and it bought, right? We see all these blue candles in this section over here, right? So we know that this was a strong buying trend for a few hours, right? If y'all can see that, drop some 7s in the chat. If y'all can see it was a strong buying trend for a couple of hours, right? Just drop 7s in the chat. Based on the color, based on the shape, based on the series of higher highs, there's a few ways that you can determine that was a short buying trend. So just 7s if y'all see it. Thank you, Nisha. Thank you, Margaret. Thank you, Vanessa. Awesome, right? Now at the top, and remember, y'all, this is still without the indicators. This is just simple. How do I look at what is going on here, right? Now, at the top of that buying trend, right, we have areas of resistance. Now, let me go ahead and circle that so y'all can see that as well. At the top of the trend, right? And every time I say something, right, if y'all can see it, right, say, I see it, because I need this to make sense. So we see that these wicks started to form, right? Right? If y'all see that, just drop, I see it, right? We see that the wick started to form. But the signal, right? And let me put another horizontal line there so we can just really follow along. And this is why I like the IM Academy scanners, because you can mark up your chart, directly on your chart. Like all these things that I'm putting on the chart is just me, so I don't have to keep all the mental notes in my head. So I'm gonna put a horizontal line right here because that's a line of resistance, right? The market was buying up, right? It was clearly buying up. It hit a line of resistance. We saw that the wick started to form on a blue candle, telling us that these buyers are running out of power. Like they cannot push the market any higher at this time. Then we get the second candle, which is the signal, right? This is our Pinbar candle telling us that, all right, it's official, buyers, we got to get them out of there. It's time for this market to sell. And then look what actually happened, right? Once we get the Pinbar signal, look what actually happened, right? We have a selling trend, right? It sold for a little while, right? And then what happened? It had a retracement, right, y'all? It hit the same resistance. It hit the same resistance because remember, it has to, right? The market always has to have that one move, right? It goes up, it comes back down, and then it retests the same area, right? It's called a retest. It retests the same area just to make sure, all right, bro, are we really selling or are we playing games here, right? We see how the buyers tried to get it back, but they just couldn't do that. We ran into another resistance, hence continuing to sell all the way down to this point, right? And even if I zoom out, it may have continued to sell even more. Now let's see if I can. I don't think I can lock these drawings in, so I'm gonna have to zoom out. I can't lock them in. I'm gonna have to zoom out, and let me just take them off the screen. All right, I'm gonna just zoom out, but I want us to just pay attention to where that candle signal, right? And then what actually happened and how long the market was selling and how many pips or how many clears we could have got off of that one freaking signal. Right? So let me zoom out. Look, like, am I crazy? Right? Do y'all see that from that one signal, the market sold for all of these hours? Like, am I bugging or is this crazy right now? So let's see if you were doing regular Forex trading, right? If you wanted to take this trade on MetaTrader 4, you will wait for your Pinbar signal, line up your indicators, and let's see how many pips you would have got if you would have hold and not fold, right? Even if you would have hold this trade for 24 hours, right? Just a measly little day, you would have got 43 pips, right? Now, if you risk $1, like I risk $1 per trade all the time, if you risk $1, that would have been $43 that you could have made from risking $1, right? Now, if you a real serious trader and you can hold your trades, you just keep coming back, you keep checking, you could have held this trade for the month. You could have held, like, you literally could have held this trade for the entire month based on that one little thing, right? And you would have did 409 pips, y'all. 409 pips. 409 pips. That's a lot because if you risked $2, if you risked $2 instead of $1, that would have been $818 that you made from $2. If that makes sense, y'all, drop some sevens in the chat, right? Because that is one signal, right? No indicators, just trading off of, okay, I recognize what this candle is telling me. That is amazing, right? That's amazing. That is amazing. So let's get out of there. And then of course, if you were doing HFX, you could clear the trades because you would have said, okay, every time you would have known that at your Pinbar candle, that's your level of resistance. So every time the market would have got close to that resistance, you would have been able to clear. Let's just say these was 1 minute, you've been able to clear all these trades because they all had the same resistance point, right? All had the same resistance point. Now let's look for another one, right? Let's look for another signal so we can just know that Cha-Cha's not making stuff up. This really makes sense. And I'm gonna keep the same candles, same indicators, so that when I do add the indicators back, it could be like, oh wow, this makes sense. All right, look at this, perfect, right there, right? Let's highlight this. Another freaking Pinbar candle, but this time it's a signal for a buy. Why? Because it's at the bottom. And I'm gonna go ahead and change the color of that so we don't get confused. And I'm gonna change the transparency as well, right? So now we have our Pinbar candle. So we got signaled at the bottom. We can see we was in a little we was a little consolidation right there. Then it was a selling trend. It was selling for 1, 2, 3, 4 hours, right? After 4 hours, our Pinbar candle pops up. So we say, all right, bet this market is about to buy. I'm getting in, right? I am getting in at the start of this next candle. And this is what happens, right? Let's see how many pips we would have got if we would have got into this trade, right? Even if we would have, whoa. If we would have stayed in this trade for 13 hours, and that's another thing I like about the IM Academy scanners, it says 13 bars, right? That's 13 candles. That's 13 hours. That's 124 pips, y'all. If somebody put $1 into this trade off of that Pinbar candle, $1, right? You would have made $124. That's crazy. Now imagine the person who puts $10 in that trade, right? And they're able to make $12.40 off of the same movement just by recognizing that candle. Now, what I want y'all to realize is that I'm gonna just keep that right there. That's about 120 pips. I'm gonna put a resistance line right there, right? Because we see that that would have been TP1, right? If y'all see in the trade, it'd be like, oh my God, TP1 smack, oh my God, TP2 smack. It's because that's the first impulsive move, right? That's the first impulsive move, right? Well, I'll do it like this. That's the first impulsive move, right? The first impulsive move is at 120. And then what happens? We have the basic thing that's always going to happen. We have the retracement, right? Then we see the little wick starting to form, right? We see the wick starting to form. And then we have another impulsive move, right? So if we would have stayed in this trade, we could have actually not only took 120 pips after 8 hours. Like, come on, like that's a day of work. Like some people make $8 an hour, $9 an hour. You made $120 by putting copying and pasting, right? Essentially. Now, if you wanted to hold this trade, because look what happened. Another candle, right? Coming down for the retest. We could have got even more pips, right? So not only do you get 120 pips in 8 hours, if you would have re-entered the trade after you took profit there, you could have got an additional 71 pips on the same trade, right? In another 24 hours, right? That's the epitome of hold on fold. So in its entirety, you would have got about 200 pips, right? Off of one trade. Or if you're doing HFX, you would have been able to clear 1, 2, 3, 4, 5, like infinite trades, right? If this is making sense, y'all drop an MS in the chat, because understanding these market movements are so important. It's so important. Understanding these candles, what you're looking at, because it's more than indicators. Now, one more thing I'm gonna show y'all, right? I'm gonna just zoom out and I'm gonna go from the support trigger and I'm gonna go from the resistance trigger just to show y'all that it's the same. It's the same thing, right? We still have this pattern. And then when I throw the indicators on here, y'all gonna be like, whoa. So look, let's say we start at the bottom, right? We're gonna connect our highs and our lows. We have a low, a high, 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 a low. Now, when I move my screen to the right, do y'all think it's going to be a low or a high? Right? Do y'all think it's going to be a low or a high before I move my screen? Based on what we're seeing right now and where I stopped my green line at, is the market about to buy or is it going to sell? Right? Is it going for this? This is an even better question. Is the market about to go for an impulsive move, right? Or is it about to go for a retracement? Y'all let me know. Is it going for an impulsive move or a retracement? And this is an uptrend market, remember. All right, let's see if y'all correct. Let's see if y'all correct. Yep, the market is actually still in its retracement phase, right? It's still in its retracement phases. But look, look what happened. It looked like, oh, that was actually a trick question, unbeknownst to me. But it actually looks like the trend was broken here, and then the market actually had a reversal. It actually had a reversal and started to go down, but let's see what happens. Let me actually add my indicators back to this chart, so we can see if everything is really what we think it is, right? Let's see, because the Bollinger Bands, even if you only use the Bollinger Bands, right, and your candles, and this is another thing I like about the Liberty Scanner, you can alter your chart to how you want it to look. So let me just go ahead and change my Bollinger Bands so that they look regular. And we just going to go and double check on those candles, right? We're going to double check on the candles that we already marked up to see if they actually align with what the indicators are telling us. So we need our upper band to be red. We need our lower band to be blue. We don't need this. And that's it. So where are our candles? Oh, look at this beautifulness, right? So I'm gonna zoom in. So we know that the Bollinger Bands act, this is so freaking mind-blowing, right? We know that the Bollinger Bands act as support and resistance, right? Now, support is always going to be a place where you can buy in the market. And resistance is always going to be a place that you can sell in the market. When we are trading, typically blue or green are associated with buyers and red is always associated with sellers. Now, when looking at the Bollinger Bands, it's really the same thing as well. The Bollinger Bands it's an indicator, but it acts in 3 lines. The top line is your resistance. So if you see your candles actually getting close to that line, you know it's setting up for a sell. And if you see your candles getting close to this bottom line, you really know that it's setting up for a buy. Simply because if I just scroll a little bit, and I always like to say this, you'll notice that 90% of what's happening in the market happens inside of these lines. It doesn't typically go out of these lines. And when it does go out of these lines, the market has to auto adjust itself, right? I always like to think about it like driving, right? When you're driving, if you start to think about the Bollinger Bands as the side of the road, right? This is one side of the road, this is the other side of the road, and the candles are the cars. If a car starts to drift on the side of the road, is it going to continue to drift into the ether, or is it going to auto adjust and come back to the middle of the road, right? So just think about the candles like that. Or you can think about the middle Bollinger Band as a magnet, and the candles are always trying to get back to that point, right? So now let's just go to the candles that we already highlighted and see if our confluence is making sense. Is this confluent? Do the candles that signal, right? Because the candle is the first signal. Typically when I'm teaching, what's the first question we ask? What color is the current candle? Right now, if you want to take it a step deeper, you can ask, what shape is this current candle? And again, this is just one style of candle. There's an entire candlestick Bible. But let's just see, because remember, we added our indicators after, right? Let's just zoom in right here and look at our buy, right? What do we see, y'all? Do we not see that the Pinbar candle, hint here, the one we highlighted a while ago, is breaking the support, right? It's breaking the support line, right? Telling us that this market is about to buy, right? It's a clear indication that the market is about to buy. Like, not only has the candle already drifted into the ether, right, on the other side of the road, but it's also a Pinbar candle, but it's also on the support line, right? And then what happens right after that? The candles start magnetizing and drawing right back to the middle, hence why we have this beautiful uptrend, right? If y'all see it, can we just drop I see it, right? Give me a this makes sense. Like, let me know, because candles really be blowing my mind. Like, it's really like the more you know. This is crazy. So that's crazy. Now let's come over here and let's look at our sell candle that we highlighted earlier, right? And we only should be paying attention to our pin bar. This is the only shape that we care about today, is this pin bar right there, right? Look at this. We have our candles starting to drift, right? All these candles was drinking and driving that night, right? They was all drifting to the side of the road. Then we see that we have our pin bar candle is actually, again, touching the resistance. That's very important. It's very important that your pin bar touch your resistance, right? Because that's how you know, all right, think about it like a hot stove too. It's like, all right, that's a little bit too hot. Let me just back up and come back to where I was at. You can also think about this as, I don't know, it's just too hot and they got to come back down. So that is a perfect example. And again, we already saw how many pips we could have taken just off of recognizing that candle shape. Now let's just zoom out a little bit more. And if you, I'll actually zoom in a lot and I'll go slow. And you guys let me know if you see any more pin bar candles signaling a trend, right? And as I scroll and you do see these things, right, I want you to look for the pin bar candle. I want you to look for it touching the support or resistance. Just let me know. Just drop a I see it, I see it, I see it. Because this should be very, very easier, much easier for everyone to spot. Look at this beautiful, oh, I'm not supposed to be telling y'all. Look at this beautiful pip bar candle with this little selling trend that happened. I got to see how many pips, because it's crazy that it's one candle on a previous resistance line that we set before, right? And let's see how much money we could have made, right? In 22 hours, right? Even if you only would have risked 10 cents, if you only would have risked 10 cents, you could have made $6.20. And what is that? $6 a day keeps the monthly away, right? One trade, you could have been done for the day. Right now, imagine if you're using a higher lot size, you're making more money. So I'm gonna keep scrolling, right? And as you guys see these pin bars align, as you see this confluence, I just love that new word. Like, just drop it in the chat. Oops. Come on, stop playing. All right, there we go. Wow, y'all. I ain't gonna say I see another one, but it's right there. It's right there, right? We got another pin bar candle on the resistance, and look at all the, like, Guys, if we would have gotten to this trade right here and just hold, don't fold all the way down because it's going crazy right now. Look at this, right? In 4 days, and this is why when I drop signals in the chat, right, for my RTP family, for my Cosmic Club family, I say hold, don't fold, because when I see the market dropping 232 pips off of a candle in a line, I'll be like, I gotta tell everybody. So it's like essentially when it's blue, it's on you. But if let's just say you don't got time to do this, you still got a full-time job, you got kids, you got all this other stuff going on, you are a multi-serial entrepreneur, you just got a lot going on. You can come in here, right, on a smooth little Sunday, Monday when the market's open. Look for your patterns, right? Don't look for everything. Just look, literally, just look for those Pinbar candles and be like, oh, I see what's going on here, right? Look for a previous place in the market that touched that same support or resistance, just how we just did, right? We went to the past and the same thing was still happening, right? The same thing was still happening after 5 days for the whole week, getting on Sunday, get out on Thursday, right? Getting on Monday, get out on Friday, right? You could have made turn $1 into $232. You could have turned 10 cents into $23. Like, come on, y'all. This is actually, it's crazy. Like, it's crazy. So I'm gonna just do a little bit more scrolling. Jackie, your question is, what's the difference between a blue pin bar and a red pin bar? Honestly, I would say that if it's a blue pin bar, well, it really doesn't matter. Like, it's the shape of the candle. It's not really the color, and that's the cool thing about it. If you see it at the top and you see, all right, let me just actually show you. If you see, it's just that the names are different. If more of the wick is at the top, it's just considered a bearish pin bar. And if more, okay, here's one right here. This will be considered a bullish pin bar, right? It doesn't matter that it's red or blue. It matters that most of that energy is coming from the bottom of the candle, right? But because it's a bullish pin bar, right, it could have been red or blue. We know that the market is going in that uptrend direction, right? Most of the candle wick will be at the bottom for a bullish pin bar, right? Knowing that the market is going to go up. And then for a, here's another one. Well, that looks more like a hammer, but it's very similar. This is, well, it doesn't matter. Wait, hold on. No, that's not a good one. That's not a good one. It's not a good one. What matters is that you will see your bearish pin bars at the top and your bullish pin bars at the bottom. Okay, so here's one. This is kind of pin bar-ish, right? Because we have, but it's a bearish pin bar because we have most of the wick at the top, right? And then we have the little candle body at the bottom. Another way to think about it is that the body of the candle is the side that's currently in control. So we see a small blue body, meaning buyers were in control, and the wick, no matter what color or what side is on, is telling you that this represents the other side. So we can see that even though this is a blue candle, we see that the buyers had low momentum and that the sellers had higher momentum, hence triggering this trend right here. All right, okay, cool. So some candlestick pattern color. So some candlestick pattern colors doesn't matter. We are looking for the shape. Essentially, yeah. And it'll, I mean, I don't want to confuse y'all, but it will essentially always be the opposite. Like if it's a buying trend, right, then the bearish pin bar, right, even though it's bearish and telling you, it's signaling you that the market is going to sell. It 9 times out of 10, it may be blue, just because it's coming from one trend and going to the other. Like that's the signal. Yeah, you could be confusing yourself, but the bearish one should be blue and the bullish one should be red, but that won't always be the case because we see one right here signaling this selling trend right there. But then we also see this is blue, but it's signaling a selling trend, right? But most of the wick is at the top, right? So we catch this trend, right? But then we see one over here where it's also blue. Most of the body is at the bottom, but then we catch this trend, right? Ooh, 99 pips in 12 hours. What it do? But yeah, y'all, that is I feel like I'm way over time. I don't even know what time it is, but oh no, I'm perfectly right on time. Look at God. But yeah, guys, that is one thing that I did want to teach y'all today, because it's very important to be able to just recognize those trends and really catch like a lot of pips. And when you do really start to understand, you really start to understand the concept of hold, don't fold, and why like that's so important. You can make a lot more money. Like I've seen 10 cents turn into hundreds of dollars just by being patient with myself and trusting the trade. Now, of course, we were looking at it on the hour. You can do the same exact thing on the smaller time frames. When it comes to HFX, you just want to look for those patterns or wait for them to see essentially what the best entry would be. Like right now, let's just see if we would have saw, this is HFX, right? Let's just say if we would have saw, well, if you're going to use it for HFX, what I would recommend is that you actually take the time to put those support and resistance lines on your chart. So you would do something like, one, have your full strategy up. If you want to use it for HFX, have your whole strategy up, whatever strategy you're going to use. You want to be able to look at those areas of support and resistance. Now that we know the M and W pattern, we know that we should put our horizontal lines at the top and bottom of any place we see those patterns. So I'm going to put one there. All right, I'm going to put one there. I'll put one there. I see a little pattern. And then we just want to see if we see any of those candles around that pattern to say if we should really be buying or selling. Even if we don't see the full Pinbar pattern, we can literally see that we have the resistance. Remember, y'all, the wicks always tell us the resistance. We got the resistance, the resistance, the resistance, the resistance, the resistance. We don't see much happening, right? And then we see that the market actually sold. So we know that once the market gets close to that line, 664, just based off our pattern, based off we know about candles, like, right? We know once the market gets back to that line, if it's going to continue the same pattern, 664 or higher, of course, we can get in for a sell. Oh, this is still for an hour, y'all. It's supposed to be for like 5 minutes or something. But y'all get the point and what I'm trying to say. You set up your support and resistance lines. You look out for the candles. You look for everything together. Everything won't always align, but the more confirmations you have and the more you understand, the better entry point you're going to have regardless, because the market is for sure going that way. So y'all, this is going to, I'm so happy, Jackie. That is good because it really pays to plug in. But all right, y'all, this is actually going to wrap up our daily training for today. Hopefully you guys learned something. This can be applied to longer term trades for my FRX people, for my Bitcoin people, for my MetaTrader 4 people. Start looking for these candles, y'all, especially as we are approaching the weekend. The market closes at 5 o'clock, right? The market closes at 5 p.m. You really can catch some really nice trends on the 15-minute time frame, on the hour time frame. So you guys can write this down. I want you to analyze or practice, right? Get your demo account, analyze your charts by the hour today. So you have about 12, 1, 2, 3. You guys have 3 more hours, right? You have 3 trade opportunities that you can take if you really want to hold and don't fold, right? Even you shouldn't really hold your trades over the weekend. I'm not recommending that, but you have 3 hours to enter trades and take profits on trades. So that would be at 12 o'clock, right? Because remember, if we're analyzing on the hour time frame, our entry points should be on the hour, right? So we have 12 o'clock, 1 o'clock, 2 o'clock, 3 o'clock. I would not get into any trades after 3 p.m. because the market closes at 5, right? Now, if you're going to apply this information on the 30-minute time frame, you have about 6 more opportunities to get in, right? You have 11:30, you have 12 o'clock, you have 12:30, you have 1 o'clock, you have 1:30, 2 o'clock, 2:30, 3 o'clock. I can't count. Maybe that was 8. So you have those opportunities if you are going to apply what we just learned on the 30-minute time frame. If you are using a 15-minute time frame, it's a lot of opportunities you have. You have 11:15, 11:30, 11:45, 12 o'clock, 12:15. Like all those, you have all those opportunities to enter trades based on your analysis, based on the candle that's forming. I would stick to the hour because remember, the bigger the trend, the more confirmations you'll have. But yeah, y'all, that is that on that. If you guys learned something today, just drop a 7 in the chat because this is amazing. I think all next week, we're actually going to be focusing on candles. Next week, the money mantra is going into candlestick bootcamp mode. We're going to learn a lot more about entry points, but adding candles to the mix, to the mixy mix. I will forward the Candlestick Bible in the Money Mantra channel. And I think that's all I have to say. If you guys have any questions, you can text me. This is my number. And yeah, that's all. I hope everybody has a great weekend. You're welcome. You're welcome, fam. I'll see y'all later.